Tēnā tātou katoa, ko Unicia Veer tōku ingoa, ko papa no tōku whenua kura, ko mau au te monga, ko toronga te moana, no Otatāhi ahau. Kia ora and welcome to the Sorted Money Month webinar, the fourth and final in our series. My name is Unicia and I'm your kaiwhakahaere, your facilitator for today. So I see a few people are signing in from Christchurch as well, so that's really great. Haven't seen anyone from Tauranga as yet, but I wouldn't be surprised if somebody does. So just a reminder of who we are, who's bringing you these sessions. We have Te Arohanga Ora, the Retirement Commission. They do a lot of work in communities, workplaces, schools, all around financial capability, retirement commission policies as well, and they do a lot of research. You'll be probably more familiar with Sorted, which is the orange logo there. That's their public face, where you'll see all their guides, tools, and their social media channels, which are quite fun to follow if you're that way inclined. I'm Unicia, so it's my pleasure to be your facilitator. My background is I'm a chartered accountant, I'm an ex-auditor, I'm an ex-financial mentor, and I've been a sort of facilitator for nearly a decade, which is fantastic. More recently, I had a bit of a career change and moved into financial advice. And we also have Tom with us on this call as well. Tom is Te Arohanga Ora's sorted personal finance lead, and he'll be joining us throughout these sessions as well, just bringing his wealth of knowledge in the area and just adding an extra voice to the Q&A sessions that we have here. So it's great to have a whole team. We also have a team behind the scenes as well, monitoring our chats and our Q&A sessions. So you'll recognise them because they have the @sorted by their name. So you'll know that that's part of our team there. Just keeping an eye on the chat and the questions as they come through. A reminder that Sorted provides free, independent and impartial information around all things money matters. Sorted is run by Te Arohanga Ora, the Retirement Commission, and their aim is to empower the people of Aotearoa on their journeys to a better retirement by helping them understand money. Remember, we can't give you any specific financial advice, but what we will do is give you great resources that you can use to make more informed financial decisions, and you can pass those on as well, which is really great. So do take notes. And we will be sending you a follow-up email with all the information from today as well. So any videos that we share and tool reminders as well. So you can follow that up and share that with friends and family as well. So this is the last session for Money Month. We have done 3 previously. I wonder if any of you joined us for those ones as well. We've had a really fantastic turnout for the other sessions, and we've got another fantastic turnout today. So if you did miss any, you can go onto the website and follow them up. They're all there for you to watch, and you can even watch last year's ones if you're interested as well. So the Sorted channel on YouTube is a great place to go and have a look there. Before we go any further, let's set the scene with our karakia. So this is just a way for us to bring us all together and really focus in on the session that we've got ahead. And it's not just about the session, but also about our own personal financial journeys. Tue e runga, tue e raro, tue e roto, tue e waho, tue ki te Arohanga Ora, kia whaihua, kia ora. Homi e, hui e, taiki e. Right, so let's pause and get sorted for this next hour. We're looking at enjoying the best and preparing for the worst, how to stay covered and protect your peace of mind. So we're going to be looking at how we can handle risk so that you can expect the unexpected, looking at the wisest ways to get insurance cover for you and for your whānau, and also why you might need a will, but also how simple it is to actually create one, and why thinking long-term is a superpower that we believe that you can harness. So these sessions are a fantastic way for you to engage. So we'll be popping up some polls throughout the session as well. So I encourage you to join in on the polls. So nice and quick. It's a fantastic way of getting your ideas and feelings on things so we can get the temperature of what you guys are thinking. But there will also be opportunities to chat as well. So you're using the chat, which is great. Please keep doing that. And there'll also be the opportunity to ask questions using our Q&A boxes. So if you can hop into the Q&A box and ask your own question, or you might see somebody else has already asked something similar, feel free to upvote that as well, so you don't have to rewrite it. That's just an easy way to keep things going. So that's it's great to know that the Sorted team are behind the scenes helping us out with that as well. So we'll be sharing the Sorted website a lot. We'll make sure that the guides are up for you to have a look at on the chat as well, so you can copy those and follow them up nice and quick. But the guides are going to be really important for this session, and there'll be also some videos that we'll share, which will be available to you later as well. So let's start by finding out why you are here today. What has made you sign on for this particular Money Month webinar? Hop into the chat and just let us know, what are you hoping to get out of today's session? And while you're there, I'm just going to have a quick look and see what other things have been going on to the chat. Oh, so great to see everybody chatting in there. Thank you so much. So we're looking for some tips and tricks. That's fantastic. Wanting to know a little bit more about insurance. We'll be definitely covering that as well. Yeah, that's great. Thinking about retirement as well, making sure that you're ready. Looking to review insurance because it's that time of the year. Insurance as well, fantastic. We won't be talking so much about investing in this particular webinar, but if you go back to the last few weeks' ones, you can find out some more information there too. And talking about wills, so that's fantastic. That's great. Thank you for sharing that. We'll have an idea of what's particularly interesting to you guys for today. The thing is, the unexpected is actually not that unexpected at all. We just can't predict exactly when things are going to happen. It reminds me of that life is like a box of chocolates quote, you never know what you're going to get. And it's a bit like that when it comes to the unexpected. And risks are the things that can derail us from reaching our goals, especially those really important long-term ones like retirement. So we want to make sure that we know what risks we have and how likely they are to happen to occur to us. So we have some statistics here for you. So these are the chances of certain events happening during your working life. So that's aged 18 to 65, just as an average here. And as you can see, these are statistics for a non-smoker. So what this is doing is breaking down the risk of unexpected events happening to you. And it does sort of back up that idea that the unexpected is something that we can almost certainly plan and prepare and expect at some point in time. So it's quite a fascinating grid there for you to have a look at. Feel free to put your comments into the chat as well if you like. And just for a comparison purpose, we also have the smokers statistics. They do vary a little bit. So there we go. Notice that a few of these different events do increase. A few of them stay the same. So I think the becoming totally and permanently disabled statistics stay relatively stable throughout the different scenarios there. But the bottom line is that events happen. There are risks and we need to be prepared for them. So when we're thinking about being covered for the unexpected, where are you currently sitting? Are you just getting through the days? Let's pop up a poll and see how we feel about this today. It's our first poll for the afternoon. It is past lunchtime. When it comes to being covered for the unexpected, are you just focused on getting through the days? Have you not thought about it? Have you actually set some money aside? Maybe your focus is on insurance, and maybe you think, actually, I've got it all pretty well covered. So lots of different options coming through here on the poll. That's great. I'll give you another second or two. Fantastic. Let's end the poll and we'll share the results. I'll share the results there for you. So you can see as well, see that where everybody else in the room is with us. Well, a fair amount of us are just trying to get through the days. So we haven't really thought about the risks too much. If you haven't thought about it at all, but you're here today, so I think you have thought about it a little bit enough to sign up for this webinar. So that's fantastic. 43% of us have put some money aside, 24% are focused on insurance, and 13% of us are feeling quite well covered. So that's great. Thanks for sharing those. It's great just to have an idea of where we're at, right? So in the chat, what is the main thing that gets in the way of us preparing ourselves for the unexpected? I'm going to invite Tom to turn his camera on as well and just join us for this part of the chat too. So Some of us aren't prepared, some of us are just thinking day to day, some of us are really well prepared. What is getting in the way of us preparing ourselves for the unexpected? In the chat there, so thinking about, well, savings, making sure we've got enough savings, money, not enough income gets in the way of us preparing ourselves for the unexpected.
There's some really good things, Unisha, coming in on how emergency savings very often gets diverted to other things, other savings goals that we have. It's hard to keep it set aside, isn't it?
It really is. And we have a saying with people we work with that an emergency is something that is unexpected and necessary. So if you weren't expecting it, but it's something that you need to cover. A lot of the things we can anticipate. For example, if you have a house, you can anticipate repairs. So setting savings aside. But I totally get it. Those emergency funds, they can be used quite easily, especially with the cost of living going up as well. I get that. Trying to survive on one income, a family of five, that can be a challenge for helping us get prepared. Trying to save when we're just trying to put food on the table, that can be a challenge as well. The increased cost of insurances, that can be a barrier that can stop us from getting prepared or having the correct amount of cover that we might actually need. Yeah.
Yeah, that's definitely one of the costs of living that have been spiking,
Mm.
just like everything else. Yeah. Mhm.
I like this. The insurance jungle. It does feel a bit like that as well, doesn't it?
Yeah,
Yeah.
I love that too because there's so many products out there, so many different kinds of policies that you can configure in so many different ways. So it does feel like a jungle.
Does feel like a jungle out there. Yeah. There's a question there around revolving credit. And I just want to put in there about credit cards as well. Quite often people will use lines of credit like revolving credit or credit cards to prepare for an emergency. The problem or the risk with that is that if you don't pay it back, it can end up costing you more over time. The cost of a credit card can be what 24% these days. So the same with your revolving credit, that can be quite high, and it can add onto your mortgage as well. So it can be there, and it can be a good backstop if needed. But there are other ways that we can prepare and prepare ourselves for these unexpected events. So the good news is there are a few ways in which we can prepare and lessen that financial burden that we carry. We're not all crazy rich, and if we were, we wouldn't need insurance. Maybe we could self-insure and have a fantastic emergency fund to cover that. But I don't know about you. I don't have a spare 500,000 at least to cover my house if we needed to rebuild. So therefore, I'm going to need insurance. Because I'm not crazy rich, we need to find that sweet spot between what we can cover ourselves through either having an emergency fund or having managing our excesses on our insurance and what we let somebody like an insurance company handle for us. So we need to know what our risks are, and then we need to know what our options are. So the risks are things are going to happen. It's just a matter of when, and we can't prepare quite for that. So we know what. But let's have a look at our options, starting off with the very first one being the emergency funds. So many of us have already talked about emergency funds, and we have actually talked about emergency funds in a few of our other sessions because it's an important part of our financial well-being. It's about being prepared for that unexpected as best we can. I don't know about you, but we call our emergency fund our rainy day account. So that's literally what it's called on the bank card. It says rainy day account. I wonder what you guys call yours. You can hop into the chat and just share some of the fun names that you might use for your emergency fund. But for us, that name means that we won't touch it unless it's a rainy day. And rainy days do occasionally happen, right? But you could call it whatever it is that you like. You might even just call it don't touch. That yes, somebody else actually called it don't touch. There we go. Somebody else is on the same wavelength there. But have you ever noticed that sometimes when you're feeling stressed, you can have trouble making decisions? And the decisions that you are making end up being focused on just getting through that short term instead of the long term. This kind of stress is caused by something that is lacking in our life, whether it's time, food, or money. And it causes what researchers call a bandwidth tax. It's when our mental bandwidth is stretched. so that we have less room to make positive decisions. We're just trying to survive, essentially. And this is what sees people turning to high cost lenders when they get an unexpected bill. That's why they exist as a service, if we want to call it that way. The loan might solve the immediate problem of the bill, but the interest payments could end up putting you back even further. So, how do we avoid this scarcity mindset when it comes to money? Well, one way we can do that is by building a safety net, a do not touch account, a rainy day fund, that creates a safety net for us, that buffer, so that when we have problems and when life throws events at us, we can free up our bandwidth to think more long term and creatively because we have the money set aside. So we don't have to worry, it's there. We can start thinking about other things instead, like, I don't know, how to do a fantastic fake away dinner. So that's the alternative to takeaways in case you haven't heard that one before. So you might want to start emergency, maybe you don't have an emergency fund, and in that case, perhaps setting one up is the first thing that you can do. Starting with $1,000 is a really good place to be, but if that's a bit too much, then maybe start with $500. How much would it cost to replace one or two tires of your car? I remember the days when we were having to replace our car tires quite regularly because we live in Christchurch, we had the earthquakes, and there was a lot of debris on the road from builders mainly. So, man, we used to run over so many nails along the way to work. So, we needed to have money set aside to replace car tires. So, that was kind of my base level. You'll have your own base level. So, maybe 500, maybe 1,000, build it up bit by bit. And it's sort of we would recommend that you have around about 3 months worth of expenses when you can. So that might not be something that you can have straight away. That might be a 3 month, 6 month, 1 year goal for you to work towards. But I can tell you, having that sort of buffer means that you can really think when things do happen, the unexpected happens. So, our poll, the second poll for the day, how would you describe your emergency fund situation? It sounds like a lot of us do have one, but I'm quite keen to get the stats. So we'll just see the poll launch very shortly. You can see people popping into the chat. There we go. Healthy and sad are the two options that came into the chat. Never had one, have had one, but never used it. Combine it with my other savings, have a small buffer, have enough to cover me and my whānau comfortably. Yeah, that's great. We'll have a look and see what other people have put into the chat there. Rainy day funds, yeah. SOS account, that's a good one too. Very good. All right, I'm going to end the poll and we can share those results. And we can see that we're all in varying places. So a few people have never had one, some have had it and then used it. And as some people have put into the chat, sometimes you use it and you have to start all over again. You know what? That's okay. You had the emergency fund, you had the emergency, you used it, now you start building it back up again. That was what it was there for. I remember my nana used to really struggle with spending her emergency funds, and I had to remind her that this time of life where she was at, this was her time to use her rainy day fund. That's okay. Sometimes we get into the frame of mind of saving it and then we can't spend it, and we just need to work out what it's there for and then replenish it as needed. So that's fantastic. So a lot of people have a small buffer and a few people have enough to cover you and your whānau comfortably. That's really great. And for the rest of us, it's just working out how much it is that we need and then making it a goal. I know it's something I would like to increase with our family, just making sure we have enough there. But the first thing is to look at what your risks are. So, what can happen, and then make a plan. Sort of has some fantastic tools that we can use as well. So, there's the goal planner that we've looked at before, and that can really help you work out what your milestones are for getting an emergency fund in place. And then once you have that goal, you can use either your budget tool or maybe even the savings tool might be another good one that you could use as well, just to work out how to fit your emergency fund savings into your spending, into your spending plan, so that you can build that up over 3 months and build it up to 3 months over however long it takes for you to reach that goal. So this is your savings calculator. We can just help you work out how much you need, how long it will take you to get there, and also how much your money will grow while you're saving as well. So you can get there even faster. So quick Q&A session. Into the Q&A boxes. What else would you like to know about emergency savings? We had many questions in there already. I see one of has already been answered. That's great. Thanks for doing that, Tom.
Unicia, one of the things that keeps coming up is how to protect that emergency savings and not have it go into other areas. And we could say just something about keeping it separate. And very often, I found you might even want to keep it with a separate bank, or at least a separate login, maybe, which is what I do. Same bank, but it takes an entirely different login in order to access it.
Yeah, doing that as well. Also, not putting it on your debit card. So making sure you can't just access it by clicking check or savings or whatever it is.
Yeah.
Making it that extra little step harder to access. Maybe even putting it into a different type of savings account. So having it as a serious saver where you earn extra interest by putting money in and not touching it. So you get rewarded for leaving it alone. Or maybe you have.
This is where, Unicia, one of the questions would come out, would you put it in a term deposit? And you want to make sure that it's what they call liquid, that you can access it on the fly if you need to. So a term deposit, depending on the restrictions on that. But I love your idea about a high interest savings, on-call savings account.
Yeah. And I think if you've got 3 months worth of expenses and you can keep some of it into a savings account, you could potentially put the rest into a term deposit that you can access in maybe 30 days. I think that might be one of the shorter term deposits you can have. So it's available, but you have a small amount that you can get to straight away. Yeah. All right, what questions do we have in there? There was a term deposit one. Savings, it takes 30 to 90 days to withdraw. Yeah, as Tom said, you want to make sure that you can access it. So you don't want it to be locked away for too long. Otherwise, you might be forced into finding an alternative before then.
Yeah, let's just talk about term deposits just for a second. The restrictions there is you have to keep your money locked up for a term. It could be 30, 60, 90 days. And therefore, if you're using it for an emergency fund, you might get a higher interest rate, but you won't be able to access it so quickly.
Exactly.
Yeah.
Yeah. So that's why having some in cash and a savings account is almost vital. Should we prioritize an emergency fund over debts? I think I've said in a previous webinar, try and do both. So trying to have a strategy to both build up your emergency fund and pay down debts is a really key part of your financial well-being and being able to meet your long-term goals as well. Yeah.
And then, Unicia, maybe you could comment on that one that keeps coming up about using a revolving credit mortgage for an emergency fund.
Yeah, we talked about revolving credits last time, didn't we? It's a common concept that keeps coming up. The revolving credit means that you've got almost like an open mortgage situation going on. Your income goes into the revolving credit and then you can spend out of it. So there's that risk that you might spend too much and your mortgage it grows. So therefore you end up paying more interest over a longer period of time. So it can have its uses, but it requires a lot of time and energy, making sure that you keep it under control. Yeah. Excellent. I think question from Julia, I think it was here. How do you cope when the rain keeps coming? Does this mean I've failed financially because it feels like it? And I get that. I can when it's tough and it just keeps on going, and probably a lot of us have felt that over COVID and just trying to get on our feet after that as well. But building that emergency fund means that you can have that mental bandwidth that we were talking about just before, that ability to be able to think a bit more long term. So if the rain keeps coming, I would say keep chucking $5, $10, $15 at your rainy day fund for as long as you can to get that space that you can start thinking about other things as well. Ultimately, if it's really tough, I would encourage you to talk to a financial mentor so that they can work with you through it because you don't have to do that sort of thing alone. All right, some fantastic questions coming in through there. There's so much. We'll try and answer some more as we go along. But here's a nice little summary slide for us around emergency funds. It's one that you might want to take a screenshot if you like. That can be quite handy. But an emergency fund is something is better than nothing. So $500, $200, anything is better than having nothing at all. The idea is to build it up to 3 months of expenses, but do that as a goal as you can, remembering to pay off your debts at the same time. So your actions are to work out what your risks are, to know what your expenses are, and then just start an emergency fund. You can use the goal planner, the budget planner, and the savings calculator as your sorted tools to help you get there. So having an emergency fund is us taking care of the risk using the funds that we have available, but there are other options such as transferring that risk. So we've got a video here to just explain a little bit about how insurances work.
Insurance is a way of protecting ourselves and our families from losing too much money if something unexpected happens to our health or our ability to work or the things we own. It's the kind of thing that's easy to buy when we don't need it, but impossible to get after the unexpected happens. Buying insurance ahead of time can help you repair or replace your home contents or car if they get damaged or stolen. It can protect us if damage to other people's property is our fault. It can replace our income if we become too ill to work. It could provide money for our families or help pay off the mortgage if we die unexpectedly. It can pay for medical and recovery costs if we get sick. Throughout this section, we'll look at how to figure out what cover is right for you.
As was mentioned earlier, it's a little bit of a jungle out there when it comes to insurances, isn't it? So here's another poll. Let's see what insurance cover we currently have. And I believe this one you can tick multiple answers. So bit of fun. And we'll wait for that poll to come on up for you to have a look at. There we go. Insurance covers. What do you currently have? Oh, single choice. Maybe you can't tick multiple ones. That's okay. Let's get a bit of a feel for what we have here. See, a lot of the common ones are coming through house contents, life, health. Oh, we've got one person who's popped onto pet insurance there. Excellent. And let's stop sharing. Oh, sorry, I didn't mean to stop sharing. Share the results. There we go. So now you can see what sort of content cover we have here with our insurance. What are we typically going for here? And it's what we expect, isn't it? It's car, it's house and contents, life, health as well, income, and as I mentioned, there's a bit of pet and other insurance. I wonder what the other insurance was. Be quite curious to know. If you want to hop into the chat, you can let us know what the other insurance is there. There are so many different types of insurances available for us. And while most of us need some kind of insurance, we don't all need the same insurance. Someone worked out long ago that we could take cover from the storms by not having to take on all the risk ourselves. We can help each other by spreading the risk among us as a group, and that is exactly what insurance does. We all come together, we put in our premiums every fortnight into a pot, and the insurance company looks after that. It grows, and as we need it, we can dip into that pot. As I mentioned before, I don't have $500,000 around to cover my house if something happened, but I do pay a premium every fortnight for my house and contents insurance. So if the unexpected happens, my insurance company does have access to that sort of money because we're all in it together. Insurance for me is also a little bit like the umbrella I carry in my car, or have by my desk, or have by the door. I hope I don't need it, but I'm really grateful if it's, that I do have it when I do need it. I mean, it does rain and I don't particularly want to get wet. So it's about being prepared and being ready for the things that will happen. Insurance is about protecting the growth we're after and keeping the people that are important to us from being wiped out from any mishaps that might occur. And it helps us to stay on track for the best possible retirement that we might be looking for as well. Insurance is essentially for covering the things that are important to us. So it's our people, our money, and staff, our stuff. Starting with the people who are in your life, what would give you the most peace of mind when it comes to them, knowing that they would be okay? That's what insurance can help us out with. So I feel like people are hopping into the chat there and just popping down what other insurances they have. But what other insurances do you know of? We have a few. Well, as I said, most of us are using the standard. I said the other was an accident. That's all fine. What other sort of insurances? Hop into the chat and just share some of the other insurances that you've heard of. Maybe you're not using it, but you may have heard of them. I remember it's probably going to age me a little bit, but there was Elle Macpherson there was a supermodel, Elle Macpherson, and she used to insure her legs. So you can get specific insurances as well. I mean, I'm not going to do that, but if that was my job, sure. Travel insurance, yep, that's one of the more common ones if you're going overseas. What else? We've got mortgage insurance there as well. See, somebody's mentioned funeral insurance there as well, Tom. We should probably talk about that one. Yeah.
Certainly should. Yeah, that's a good one.
Yeah. So on funeral insurance, there's different packages that can be available. One is called funeral insurance, which is where you pay a regular premium for an infinite period of time. So you could keep paying for 20, 30, 40 years to build this up. Another is a funeral package where you say, I would like my funeral to cost, say, $6,000, and you pay until you reach that $6,000. And usually those packages are arranged so that that 6,000 is still worth 6,000 in the future when you get to use it as well. So it's adjusted for inflation. But that one has an end time where you stop paying. So it's different to insurance. So be aware of what it is that you're paying for and how that's actually going to benefit you as well. So I'm not a huge fan of funeral insurance, as you might tell, but funeral packages can absolutely have their place. Other insurance, disability as well, fantastic. There's so many. We can have boat insurance if you've got a boat, but if you've also got a house, there are some other hidden insurances that you may not be aware that you're already paying for. For example, EQC. That's an insurance, and a lot of us have probably benefited from that as well. Or if you are an employee, then you're probably paying ACC. So that's a form of health insurance that we all get the benefit of when we injure ourselves. So there's a lot of different types of insurance that are out there for us. So there you go. There's a nice wee pile of insurance types there for us. Pet insurance. I've got a couple of cats, probably not too concerned about pet insurance for them, but my auntie has a dog, and pet insurance is way more important for her. So insurance is paying for the peace of mind, and obviously we pay in terms of the excess and premiums as well. So what we're paying for with the insurance premiums, whether we make a claim or not, is that peace of mind and for that risk to be covered in case something happens. The risk doesn't go away just because we have insurance, but now we have the peace of mind that can help us out in case that situation does arise. This graph here is just a way of demonstrating the risk of not having insurance. What are the chances of us not being able to meet our goals when these events happen, especially when we think about our family? If something was to happen to us, would their financial well-being stay on track? So without cover, our financial well-being drops after each event, as you can kind of see from this graph here. But with cover, our financial well-being can stay on track. And that's really important to us, but also to our families as well. The bottom line is, if you can't afford for something to happen, to things that are important to you, your people, your stuff, your money, then consider taking insurance so that that important thing is well and truly covered. So insurance is about firstly identifying what type of cover you need and what's in your budget. So emergency savings is a good step. and identifying what are your non-negotiable insurances. What do you need to have cover for? As I said before, you might not need to have everything, but know what's important to you. It can be quite a shopping list to have a look at, so try and work through those weeds and work out what is actually important to you. Looking at what are the chances of it happening, we had a look at that slide a bit earlier. But what would happen if it did? So that's really important for us. And then how much would it cover as well? We have contents insurance, and I have a teenager who rides an e-scooter, and that's their main source of transport. That scooter has been stolen twice in the last year. It's not even a year. It's only 8 months into the year at the moment. But insurance means that we've been able to replace that transport for them as soon as possible. Yes, there's been the cost of an excess, but it's meant that they've been able to get off to university as often as possible. So for us, the risk of it happening again, probably going to happen again, unfortunately. But we have the insurance, we have the cover, and we know that it's going to have a good payout for them. We will be talking to them about covering that excess next time, however, the teenager that is. The next thing with insurance is understanding about the research. So knowing what is an excess. So an excess is the additional bit that you pay when you make a claim. So you might have a $200 excess, a $500 excess, or a $1,000 excess. The higher your excess that you pay, the lower your regular fortnightly premium will be. So it's about finding that sweet spot between how much do I have, say, in an emergency fund or a savings account to cover the excess versus how much do I want to be paying out every fortnight. So find that balancing place that works for you, because the insurer is going to cover the difference. The trade-off is that you will have to pay more each claim if you have a higher excess, but it's good to choose a policy excess that matches that point where it would become a struggle to make the payment. So work out where that is for you. Also research what is included in your cover and what is excluded. For us, it's important to know what that the e-scooter was included in the cover, and where they parked their scooter was also important. And the fact that it was in cover in a secure covered area, and it had a lock on there, all meant that the claim could go through nice and easily. But if that wasn't the case, then we might be in a little bit more trouble. So read the policy carefully, take the time to check it, and if you're not sure about your cover, talk to your insurance broker or talk to your insurer so they can explain anything that's unclear.
Unicia, an interesting question came up about the play between emergency funds and the excess. And obviously, if your emergency funds can only cover so much and the excess is higher than that, then you're actually not covered. There's a gap between the two things. One or the other needs to keep you covered and protected.
For sure. For sure. Premiums are something we've talked a bit about in the chat, I've noticed, and they have been getting more and more expensive. The latest data from Quashed, which is an online insurance comparison website, shows that the national average yearly premium for car insurance is nearly $1,300, which is quite high. It's actually a 40% spike from the average from last year. And that's almost about hard to swallow, really, isn't it? That's the cost of living, and there are many reasons why insurance premiums go up, and we don't have an awful lot of control over that as an individual. What we can control is the excess side of things to try and reduce that premium as much as we can. But car owners aren't the only ones facing this shocking increase with their insurance bills. Our home insurance has also climbed about 25% on year, so that's quite a bit. Auckland homeowners are paying around about $2,000 on average for home insurance, but in Wellington, it's about $4,000 per year. I would be quite interested to know what the Christchurch average is there as well, just so that I can work out what we're paying and whether we're outside of that, because that would be a cue to do something about it, wouldn't it? Yeah. So what can we do about it? Well, we know that these premiums are putting a real squeeze on our household budgets, especially if we're on a fixed income or money is tight. But the Quash data shows that by taking the time to shop around, the average household could potentially save around $2,000 to $3,000 a year on their total insurance costs. So taking the time to shop around can really pay off. When premiums are sharply increasing, these savings become even more and more meaningful. So what can we do? We can adjust our coverage levels. Maybe the last time you looked at your insurance was was 5 or 10 years ago, and you had different items in your house, or you had a different type of lifestyle. So adjust your levels, check that it still suits you and where you're at now. There'll be different life stages as well, so make sure that it works for that too. Once our kids leave home, then our insurance will change, or maybe it will increase as they leave from home. I haven't got to that stage of my life yet, still have to work that one out. You can also bundle your policies. So some insurers will offer a discount if you have multiple policies with you. It doesn't mean to say that they're the best provider, but it can be an option if you bundle your policies. They might give you some discounts on your insurance. They might also give you discounts on, say, your broadband or your phone plans as well. So there can be some real benefits there if you're happy with that insurance policy and provider. You can improve the security you have. So I talked about having a good lock on our e-scooter. That's the sort of thing that will improve our ability to make a claim if needed. But also having an alarm in your car or having security cameras around your house can also reduce the cost of your insurance premiums. I'm pretty sure insurers still ask if your car is parked in a garage, and if it's locked and things like that, that can also reduce your premium. And if you can, and this one doesn't work for me, but build your no claims history. I'm well aware that we're claiming way too much with this with these e-scooters, but the longer you can go without a claim, the lower your premiums will be. So if you're really good at not needing to claim, then you will get better rates, which will benefit you in the long run. So shopping around is a real key thing. It pays to get a range of quotes and to compare these quotes. Look closely at what is included and what isn't included. As we've learned, insurance policies are often very complex documents, but don't let that get in the way of you understanding what is covered. If you're signing up for something and you're paying for something, then you deserve to know what it is that you're actually paying for. Does it meet your needs? You might be underinsured, but you also could be overinsured, paying too much on premiums. So talk to an insurance advisor who can help you out with that sort of thing as well. It is a jungle out there when it comes to how many things are available for us. So an insurance company, a broker, or an advisor can help explain how the policies work. They can find the best one for your circumstances, and they will even help you lodge claims when that time comes. Some financial advisors can also help with insurance needs if they have specialized in that particular area. So there are 3 different types of financial advisors. There's mortgage, insurance, and wealth. So they all have different lanes and they stay in their different lanes. So check if they can actually help you out with that one. Insurance companies and all financial advisors need to be registered on the Financial Service Providers Register, the FSPR. So you can actually search that register if you like and see if the advisor you're talking to is actually registered, because they need to be. And if there is a complaint that you need to make with your insurance company, your broker, or your advisor, there are different disputes resolution schemes available as well. So each company will have their own one that they're using, but there are basically 4 that we pick from. There's the Insurance and Financial Services Ombudsman, the Banking Ombudsman, Financial Services Complaints Limited, and the Financial Dispute Resolution Scheme. So if things do not work well for you, you can make a complaint and we'll quite often get a resolution there as well. So seek the support that you need from a specialist in insurance, also by looking at the sorted guides and by looking at online comparison tools as well.
Unicia, can you just cover really quickly how insurance advisors get paid? Because the question is coming.
So insurance advisors generally, they get paid by the company who you end up being insured with. So they will collect a range of quotes for you based on what you need, based on what cover you need, and they will present those to you at no cost to you. And then you choose which ones work with their advice, and then they will get paid by the company that you then select. So that's where their commission comes from. Generally, it's no cost to you. So do check that one out and make sure that you're not paying anything there. But they get paid from the companies that they refer you to. So you can check who they work with. So if your insurance advisor only has maybe 3 companies that they work with and you want a different company, then maybe that's not the advisor for you. Find the one that has the companies that you want to work with, I guess is what I'm saying there. I hope that answers your question. Yeah, cool.
Thank you.
Yeah, those policies, as I said, if you don't understand a word, ask. If you don't understand what the term means, because it's quite legal jargon, ask until you do understand. Also, be honest. So when you're talking to your insurance advisor, be honest with them. Don't try and hide anything because it won't pay off in the long run. You will get stung. So be honest because they're there to find the best cover with the information that you give them as well. And insurance companies also have credit ratings, so make sure you choose one with a good credit rating there as well. Like with all financial matters, we need to be active in keeping on top of our insurance needs because they will change at different ages and stages of life. What you need as a single person versus what you need as a double income, no kids, versus what you need when your kids are growing up are all going to be very different, including as you head into retirement. You might find there are certain insurances you no longer need as you get to a certain age and you don't have dependents. So, talking to an insurance advisor can help you make those decisions so you're not making it on your own and leaving yourself unexpectedly exposed to some risks. And when you review your insurance policy, I would actually encourage you to grab a highlighter. Grab a highlighter, highlight the key terms that you need to know, highlight those exclusions so that you know where they are and you know what you're covered for and what you're not covered for. It might be a really interesting exercise to do. All right, what questions do we have for insurance? Because I know this is an important topic for everybody, or have you already answered most of them?
There've been a lot that came in, but welcome some more. I'd just like to point out that insurance advisors, when they're independent, they're actually like your personal shopper. And they can work with a variety of different companies and make sure to get you the best policies out there. So they might, for example, cherry pick for you where you get one policy from one company, another one from another, and coordinate so you have the best package for your needs.
Absolutely. And it's their job. They actually have the 9 to 5 job to do the shopping around while you're doing your 9 to 5 job. So make the most of that.
Not only that, when you make a claim, part of their job is to actually to usher that claim through the system and make sure it gets paid. So that's the other side of it that's really important to know.
Yeah, absolutely. So you can have a relationship with your insurance advisor. They can really get to know you and work for you. So, in summary, when it comes to insurance, cover your people, cover your money, cover your stuff. Be active in your choices, know what it is that you're trying to insure, and maintain it as well. So, you need to identify your needs. What's important to you? Do that research and compare. Bosch is a website we've referred to, so feel free to go and have a look at that one as well as the Sorted website as well. Then, and if you do have insurance, take the time to stop, review, and revise what you currently have. So talk to an advisor, see if other people can recommend an advisor for you. But we've also got our budget planner and the different guides there on Sorted for you to utilise. So let's head into wills and enduring power of attorney.
When it comes down to it, no one is saying on their deathbed, I wish I bought more things. It can be pretty hard thinking about what might happen when we're no longer around or no longer able to make our own choices, but eventually one or the other will happen. So it's important to protect yourself and the ones you love by planning for their well-being when something unthinkable does come to pass. In this section, we'll look at wills and EPA.
The EPA being enduring power of attorney. So wills are it's almost the end of life document. It's the thing that if you died tomorrow, what would happen to your assets? Who would look after your property? Who would look after your children if you or your partner passed away? Not having a will can put you and your family into legal and financial difficulties. Maybe not you in this situation, but your partner or whatever that might be. Whereas a power of attorney is actually something that happens while you're still alive. So a power of attorney gives someone the authority to legally act on your behalf. And there are 2 types of power of attorney. There's general power of attorney, which is useful when you want someone to look after a specific issue on your behalf. For example, if you were to go overseas for a long period of time and you want someone to look after your property for you, then they might be able to help out that specific period of time for that task. Whereas an enduring power of attorney comes into effect when we can no longer make decisions for ourselves. We no longer have that capacity to make decisions, and an enduring power of attorney kicks in. So, who would make the decisions for you if you couldn't? Let's start thinking about the more unexpected things. Who would make the decisions for you if you lost that capability? How about, can you give me a heart reaction if you've had to act as someone's power of attorney before? Someone that you care for? There's a few people who are. So you've been here, you've done this before. We've seen this with our family. Lots of us will have experience in terms of power of attorney. And it's important for us to know who it is who's going to make those decisions for us when we can't, because they have a lot of legal backing there. So it's got to be somebody that you trust. Enduring power of attorney is actually broken down into two further steps. So you have personal care and welfare, which can be, which it has to be one person, and it has to be a person. They look after your personal needs, where you'll live, who will look after you, your clothes, your medical needs, and your well-being. And property is the other one, which can be another person, it could be the same person, a different person, or it could be a trust. And their job is to look after your money and your property. So two different roles there, can be the same person. But let's have a quick listen to a little bit more about power of attorney.
Have you ever called your power company to query a bill or make changes to your service? Many of us have been frustrated because we can't do anything because our name's not on the account. This is a simple illustration of where a general power of attorney may come in handy. If you're overseas or temporarily incapacitated, giving someone the power to make decisions on your behalf can be extremely valuable. But what about the unexpected? Having an enduring power of attorney, and there is a difference, is for when you're no longer able to make decisions for yourself, whether through accident, illness, or otherwise. Planning for someone you trust to be able to support you with important decisions is helpful for peace of mind, both for you and your loved ones. These decisions may include paying bills, selling assets to pay for medical expenses, through to taking steps for the purposes of planning your care. Identify which power of attorney is right for you and put it in place now to protect you and your family.
Not always an easy topic to consider. And I just want to point out that if you don't have a power of attorney and you thought your spouse will automatically get that role, it doesn't actually work that way. What will happen is they'll actually go to family court and a judge will appoint your power of attorney for you. So your spouse is not automatically your power of attorney. If you want them to be your power of attorney, then that needs to be something that's actually completed. It's also worth...
Sorry, Unicia, some great questions coming in on EPAs for a single person. Is it worth getting for, or if you don't have anyone trustworthy in your life?
Oh, I understand. You can nominate a friend. It does not have to be a family member. I'm power of attorney to a couple of my good friends. You know, it's an honor and a privilege, and it's something that I'm always aware of. That is a role that I hope I never have to do, but it's right there, and I'll be willing to step into that space if they need me to. So you can pick a friend. It can be anyone that you like that way. So it just has to be somebody trustworthy because they're working on your behalf. They need to know what your wishes are. So it needs to be a conversation that you have with your person that you're choosing as your power of attorney about what it is that you want them to do, because there's a reason why they've chosen you. It's also worth considering a second person as well, just in case that first person that you've nominated can't be your power of attorney. And there are many reasons why that might be the case, ranging from financial reasons to actually they just can't do it. They're not in the right place at the right time. So having a backup can be a really important thing. So I know it's hard enough to think of one person, but can I encourage you to think of a second person as well? It's quite often the case when it comes to having husbands and wives as power of attorney. Hop on and definitely do the poll there while I'm talking. But if you're a husband and wife and you're both each other's power of attorney, and if you're anything like me and my husband who are similar ages, So if one of us is likely to lose the capacity to make decisions, it's kind of likely that the other won't be too far behind. So yes, we can be each other's power of attorney, but we might want to back up as well, because you don't want to end up in that loop where you end up in family court and the judge needing to appoint somebody for you. So it's just worth being aware of. Now I'm going to end that poll there and share the results for you. So do you have a will? We are nearly 60% no and nearly 40% yes, and a couple not sure. Yeah, that's good. So we're almost split right down the middle, aren't we? But a will can be really important when it comes to that end of life stuff. So it's I think you're already hopping into the chat and sharing ideas anyway. But for those of you who don't have a will, why not? Hop into the chat, just share what is your thinking behind not having a will. Maybe it's just you haven't had the time. But yeah, just hop into the chat there and just share what it is. I'll let Tom keep a read of that one. Cost. I'll show you a slide shortly about the costs of that it doesn't have to be too expensive and where to start as well. Yeah. Having very little assets. Interestingly, if you've got more than $15,000 worth of assets, then you probably want to have a will, because otherwise there are predetermined legal rules around what will happen to those assets otherwise. And if you have
that includes KiwiSaver, right?
Exactly, I was going to say, and if you have KiwiSaver, then that 15,000 won't take too long to get across. Most of us are going to need a will. Wills will cover your property, your children, if you have any. It can cover future children if you want as well, so you can think about that. But it'll also cover who is going to take care of your will, who that executor is, and also your wishes. So do you have any particular funeral arrangements that you want? Any donations that you want to make at the end from your estate? All that sort of stuff goes into your will. Wills don't have to be pricey. Online platforms like Public Trust, Lawhawk, or Footprint can offer low-cost options for wills and enduring power of attorney. And you can find all sorts of help out there as well. Some lawyers may even write it for free, but you just have to ask. You can even go to the library and work out how to write a will that way. But for it to be legally valid, it needs to be intended as your will. You need to be of sound mind. It needs to be in writing, so it can't just be verbal. It needs to be signed by you and witnessed by two people who are with you when you sign. And those two people cannot be beneficiaries of your will, and they can't be the partners of your beneficiaries either. So yeah, those are the things that you need to have for it to be legally valid. I'd also say don't tamper with your will. Don't try and put any paper clips to it. Don't put any staples in it and take it out, because that will lead your executor to think that something important is missing, and that can make your will invalid. So there are some risks around your wills, and one of them is dying without one. So if you don't have a will, as I said, and if you've got more than 15,000 in assets, then the law steps in, and that the law will dictate, based on these predetermined rules, what will happen to your estate. And that may not match up with your unique family situation. And it's also a very long and costly process to go through. It's called dying intestate, and so you want to make sure you do have a will to say what it is. It can be a simple will. It doesn't have to be complicated. Wills can get out of date, so any life events that happen need to be reflected in your will. So getting married, having children, grandchildren, any of these sorts of things will affect your will. Suddenly coming into money, suddenly having a large KiwiSaver account, you might want to put that into your will as well. So you don't want your will to get out of date. Certain life events will revoke your will. For example, if you made a will before you got married and then you got married, your previous will no longer be useful. And the same thing if it happens if you get divorced, it revokes your will. But there are always exceptions to those rules, and there are some around promises. I'm not going to go into that, but it's not a hard and fast rule. Same as this one. Is a will legally binding? It's no hard yes or no with this one, right? The aim of a will is to express your wishes about what you would like to happen. And that's in terms of your funeral, your estate, any children or people that depend on you after you die. But your wishes can be challenged. But we do our best to write everything down into your will so that the people who are reading it know what your intentions are. A will does need to be fair as well. What else do we have in the questions before we finish up here for the afternoon, Tom?
Yeah, we had a lot of questions come in about how much it costs, and then who to go to. Lots of the more technical questions on wills should be answered by a lawyer. You should get some legal support there.
Yeah, it can get really complicated. We don't have the nuclear family situation quite so much, and your situation will be so unique. So talk to a lawyer and make sure that you are well protected. There are some really lovely complicated situations out there, and it's worth having those conversations to make sure that the people that are important to you are protected while you're still here and when you're not. So if you don't have a will and you've got more than $15,000 worth of assets, I would encourage you to get a will. There are ways you can do it without costing an awful lot, but focus on what it is that you need to have in your will, review and maintain it as well. Think about who you want for your enduring power of attorney and talk to them about it. Hopefully they're happy with that. Most people would be, I would imagine. But also look at the sorted guides to see what else is available there for you. So we have covered an awful lot in this last hour. It has been a full session where we have talked about the types of risks that we might bump into in our day-to-day lives. We've talked about why an emergency fund is important for us so that we can have that ability to make decisions when the unexpected happens, building that up to 3 months worth of expenses as and when you can. We've talked a lot about insurance and understanding how that works for us and what sort of coverage we might need, but also the importance of talking to an insurance advisor to get that real detail for you. Wills and protecting our wishes and our power of attorney have been really key things to think about at the end of life, but also when we're not able to make those decisions for ourselves. So remember, we are here to help. We have all these resources available on our website, on the Sorted website, so you can find more about the protecting wealth side of things on the website. Go browse the guides, and I'm sure the team has been putting that into the chat as we've gone along as well. We have a few more days of Money Month ahead. I'm sure there'll be more content coming out, not just from us, but from other partners along, who are joining us with Money Month as well. So those tools, I reckon we have covered pretty much all those tools throughout this month. So I'm really impressed with the coverage that we've done there. Go have a play, get familiar with those tools, and yeah, just utilize the free resources that are out there for us. One final poll for today. How did you find this session? Has it increased your confidence in the steps that you can take to protect yourself and your family? Yep. And if you're still feeling unsure, I'd encourage you to talk to someone. You can talk to a financial mentor. They're not going to give you advice around insurance, but they can help you to break down some of these things for you. They can definitely help with emergency funds. That would be their number one tool that they would love to help people with. So Money Talks is the website to go to find a financial mentor there. And so I'm going to share the poll. And actually, yeah, we'll just close that off. Cool. I don't know, hopefully that's not still up there for you guys. But thank you so much for joining us. This has been a pleasure to take you through these 4 sessions, and you can go back and listen to these at any time later on. You'll get an email come through shortly from the team just to remind you about the session that you've just been in and how you can access it all over again. But tēnei te mihi atu kia koutou, Māori ora kia tātou. Thank you so much for joining us. Thank you, Tom, for joining me as well. It's been a real pleasure having you along for these sessions and just having your voice in this conversation as well.
Kia ora tātou. Great to be with you all.